What is going on, traders? Welcome back to the Traveling Trader. Today, I wanted to talk about Bitcoin's price, what it's doing on the weekly versus the daily, and I'll get into a few coins that we are still holding, some for long term, and I'll go over a couple of successful swing opportunities that are up for potential re-entries, and then I'll talk about what's going on in the traditional markets as well as which commodities market I'm currently eyeing. Just a hint, it's not gold or silver, but you'll find out towards the end of this video when we do our traditional market updates. Looking at the cryptocurrency market cap, we are steadily climbing. We're at almost 140 bill. We're at 139.2 bill. Bitcoin's price keeps flirting with the $4,000 range. And if we look back at some of the alts, some of the main notables, one that we've completely ignored almost is Bitcoin Cash. It is creeping up. It's almost up 21% over the last week. Nobody's really talking about this. Ontology up 16% over the last week. This was one of our swing trades. And if you want access to the trade alerts, link is in the description. You'll see it there. And that'll also give you access to the VIP group voice chats that we have. And as a perk, I do a 0.03 Bitcoin drawing every month for the diamond traders and above. All right, let's get right into Bitcoin. Looking at Bitcoin here on the weekly, we pointed this out before, but this is the 50 and the 100 moving averages, right? So the orange is the 50, the yellow is the 100, and this is a mini death cross when the 50 falls below the 100. If it falls below the 200, that's called, that's the main death cross basically. But the 200 is here in green, and we are steadily bouncing off this. Now, Bitcoin is actually forming a potentially bullish pattern here on the 1 week. This is an ascending triangle. You could see that since November, it's really been hitting this resistance point multiple times. Now, what does this tell me? Well, this tells me that if I'm overtly bearish on the market, this tells you that you can actually initiate a pretty safe short play once it hits resistance again, right? It's tried to pierce through 1, 2, 3, 4, 5, 6, 7, almost 7 weekly candles since November, right? So that tells you that it is having trouble getting above it. The volume is really not anything to write home about. It is consistently coming in below average on the volume. There might be some room for another leg down. It doesn't mean that we'll break this descending triangle to the downside, this ascending triangle to the downside, but it does mean that within this channel, the price can fall, and with leverage, you can potentially make quite a few gains on a leveraged short. If I do enter a short here, I will put it in the trade alerts. So again, sign up if you want access to that. But I'm not telling you what to do. I'm just giving you ideas that it looks like it could be a potential play, and you can set a tight stop limit in order to protect your short, but it looks like it could be a potentially profitable play with it, trying to break resistance and really not able to get above there. If I were to set it, I would probably set it at around 4,100, because if you look at the highs of these candles, this one was at 40, this one back in December was at 4,100, second week of December, 4,100, 4,200, almost 4,100, 4,100, and then 4,100 in the week of February 18th. So 4,100 seems to be the safe range to set the short. If you wanted to be a little more conservative, you could put it at 4,150, for instance, but then you might run the risk of not hitting that level. All right, looking at the daily. If we look at the daily, it is just basically a more granular representation of what's going on the weekly, right? You still have this ascending triangle going all the way back to November. However, here the 50 and the 100 are converging. It is not really clear which direction this wants to go. We've seen this before where the 50 and the 100 can touch, but then, the 50 falls back below the 100 if there's no momentum or volume to keep carrying the 50-day moving average above the 100. The 200, forget about it. I mean, we shouldn't even be talking about this yet. The volume is really shit. You see that the flat VFI, and it's flat, but it's in a negative range, right? It's in this negative 15 to 20 range on the VFI. So there really isn't a good amount of volume flow coming in on Bitcoin on the daily. It'll be interesting to see how this plays out. I mean, if we continue to trade sideways within this range for quite a while, it'll be a long time before we get to the apex of this ascending triangle, right? And Bitcoin has to make a decision whether it's going to fail the pattern and break to the downside, or we're going to get that volume and momentum and break it to the upside. In crypto trading, more than anything that I've ever seen, volume volume is really key. There really isn't anything else that will propel the price upwards on a healthy rally besides volume. In stocks, you do see sometimes the stock price moving significantly without a mass influx of volume coming in. All right, a couple of altcoins that we've been trading. Looking at BNB, BNB continues to be a major stronghold in my long-term portfolio. Been holding it since November, and we are currently up 210% on BNB, and it is still strong because it is in this sideways continuation pattern with no sign of any major retracement. It is retraced about 10% a couple of times on the way to this rally. But, when we're talking about something that has rallied 210% since November, 10% is really insignificant. And the more that you're up on a coin, the wider you could set your stop loss so you don't get stopped out prematurely, right? So if I'm up 210%, I can easily set a 25 or 30% stop limit safely. And that way I stay in the coin long term. But if something goes awry and we see a major correction or retracement, then I safely exit the coin. Looking at RVN, RavenCoin is one that has netted us quite a few healthy profits, right? So since we entered at the breakout of this magenta resistance line, we were up 92%, and then it started retracing again, but it was forming a bull flag as it was retracing. So we were monitoring the breakout of this bull flag, entered it again for another almost 40%, and now it's currently trading sideways. You could, if you have, RavenCoin, you could hold on to it since it is in this range bound pattern trading sideways. Actually, it looks like it's forming an ascending triangle here. So if you look at the resistance of the triangle, and then the lows are continuing to make higher lows. So it is forming a bullish pattern here, but the 50 is coming in dangerous close contact with the 100. This is on the 4-hour chart, so this isn't the 50 daily, but it'll be interesting to see how this plays out. Volume is just completely shit now compared to what it used to be, that pushed this rally upwards. If you see the volume is just completely declining to a point where you barely can see it. So it'll be interesting to see how RavenCoin plays out. You could hold it with a tight stop limit. If you don't hold it, the way that I would play this is I would wait for the breakout of this ascending triangle and monitor the volume before entering a swing trade, potentially to the highs that we saw back here in the first week of March. Looking at Enjin Coin, Enjin Coin was just forming a series of flags. This is on the 1-day chart. You see the bull flag here formed in February, and then another bull flag here. And these are really, easy to play, especially when you look at the volume and you see the types of volumes that are coinciding with these pushes upwards. You can safely enter at the breakout of these bull flags with the tight stop limit and take advantage of these large swings that you see here. You see this tall green candlestick almost, singularly acting as the pole of this bull flag. Same thing here. And now we are breaking out once again. Again, keep your eyes peeled for the trade alerts. All right, looking at the traditional markets. So the traditional markets, not much movement today. The Dow, is down 0.09%, S&P 0.11%, NASDAQ is up 0.05%, but it is still early in the day, so we got to give the market some room to breathe. But the one commodity that I mentioned in the beginning of the video that I'm trading currently, it's not silver, it's not gold, it's crude oil. Now, crude oil, we see this inverse head and shoulders forming going all the way back to November, right? But obviously the inverse head and shoulders is a bullish pattern or potentially bullish pattern if we break above the neckline, but it is coming off of these 2-year highs, close to these 2-year highs that we've seen on crude oil going all the way back to June 2017. It almost stopped, or it did stop at exactly the bottom that we see here in June 2017. And as a matter of fact, now that I'm looking at this, November 2016, almost the same exact point. So this is called a triple bottom, right? It hits this bottom support point 3 times, which is also a very bullish signal. But you see the volume coming in on crude oil as well. So crude oil, based on the fact that it was forming this triple bottom, and then if you zoom in and just look at isolated to this current pattern, it's an inverse head and shoulders. It was apparent that crude oil was undervalued, and obviously the price of crude oil has a lot of factors, the world economy being one of them, foreign policy being another, trade talks, trade wars, etc. So being that crude oil was undervalued in price, that one of the easiest ways to buy commodities is through asset-backed ETFs. So there is an oil ETF called UWT. I did send out a trade alert for this going all the way back to, it might have been the first or second week of February. I sent this out on the Discord. We are now up 20% on the UWT ETF, which is tied to the price of crude oil. So I will remain in this. Obviously, I'm going to set a stop limit to protect these 20% profits, but my intention is to remain in this until crude oil retraces back to close to the swing high that we saw in October. It is a very likely move, and it is a very doable move, right? With trading, you do have to be realistic, right? In terms of the potential profit, obviously you could surpass these highs that we saw back in October and establish new highs. But in order to remain on realistic grounds, we have to look to previous levels of support and resistance to base our potential profits and losses off of, right? You don't want to project unrealistic terms for your trades. Another thing, just one more bullish point on the crude oil or this UWT ETF. Oh, sorry, no, this is crude oil, is the 50 and the 100-day converging in this mini golden cross that you see here. And again, it is very likely that we do see the 50 eventually cross above the 200. So UWT, I know that for you crypto folks, 20% seems like nothing, but in the traditional markets, 20% over a short period of time, again, I sent this out just a couple of weeks ago, is a pretty hefty sum in the traditional markets. In terms of crypto news, it's really been a slow day, so there isn't much to report here. So I'm not going to go over any of these news stories that we see here. You see the same old talking about backed and Bitcoin futures, etc., but really nothing to disclose at the moment. So we will keep that for another video. All right, that is it for this video. Reminder, there's a 0.03 Bitcoin drawing on the 1st of next month, on the 1st of April. We do that every single month for the diamond traders and above level. I will give you at least a month's heads up when we stop doing that. If you have a comment or a question, leave it in the comment section below. If you got anything out of this video, leave it a thumbs up. Subscribe to the channel, hit that notification bell. If you want access to the trade alerts, link is in the description. If you need help with your technical analysis and want one-on-one time with me, that link is also in the description. We might have 2 possible spots coming up for April. Those tend to fill up fast, so sign up if you want. Stay safe out there. Peace.